Dividend-paying stocks are one way to finance your retirement, your lifestyle, or your day-to-day expenses. But they truly work while you keep on reinvesting your dividends back into your stocks while you're still working, because that is when you get to see the effect of compound interest and you get to enjoy all the money you've reinvested and invested when you're retiring, or when you want to use it for other things like for your education, for buying a car, or even for buying a house. So in today's video, I'm going to be talking about the top 5 USA stocks that pay dividends every month, and you can also find them on the Equities USA account. And I chose this stock specifically because of their availability on the USA account and here in South Africa, because I could have made a lot more video about other stocks, but they're not available on the Equities account. And another reason is because they are the most best recommended stocks which pay monthly dividends according to my research sources. So before I start, I just want to explain what are dividends and how they actually work. And if you know what are dividends and how they actually work, then you can skip this part of the video, as I've provided timestamps in the description below. So dividends, or a dividend, is a reward paid to the shareholders for their investment in the company's equities, and they usually originate from the company's net profits. And although all the profits can be kept within the company as retained earnings and to be used for the company's future ongoing business activities, the remainder of that money can also be used and allocated to the shareholders as a dividend. So how this basically works, let's say for instance you open up a business or a company, right? And then let's say your family, which is your mother and father, and then your siblings, which is your brother and sister, they all decide to buy shares or equities of your company, right? And then after 6 months your company becomes profitable. Then you as a CEO or you as a director of the company, you decide to keep that money as retained earnings, or you decide to keep that money and allocate that money as a dividends to your family or to your investors, right? So how you'll do that is that from those retained earnings, you'll first calculate the expenses of your company, of how much the company will need for it to survive in the next coming 6 months until the end of the year. And then after all the expenses have been calculated, the remaining of that money, you will then allocate it as dividends to your investors or to your family, which they've already invested the money into your company. And then how that basically works is that the money or the dividends differ according to how many shares of a company has. So let's say maybe your parents, they own maybe 50%, or maybe they have like 500 shares each of your company, and your siblings have each maybe 100 shares of your company, right? Then the amount of dividends will not be the same. Your parents will get more dividends because they own more shares, or they own more equities into your company rather. And then your siblings will not get the same dividends as your parents because they own maybe like less than 1,000 of those shares. So that's how they differ. So hopefully that was helpful, and let's get straight into the main video of today. The first company that pays out dividends every month in no particular order is a company called AGNC Investment Corp. So AGNC Investment Corp is a REIT company, which means the real estate investment trust, but a specific type called a mortgage REIT. So what they basically do is that they buy mortgages on real estate rather than owning the properties themselves. So in this real estate investment trust case is that it buys safer agency-backed residential mortgages. The company has been public for more than 14 years and has paid out sizable dividends along its way. And although the company's dividends may also fluctuate depending on the economy, this company has a dividend yield of 12.9% and a market capitalization of $5.8 billion. So the second company that pays out dividends each and every month is a company called Main Street Capital Corp. So Main Street Capital Corp is another leading business development company with a diversified portfolio, a proven track record, and a lofty monthly distribution. So Main Street has 190 cumulative investments and manages $5.8 billion in capital. The business development company focuses largely on the debt investments in the lower middle market companies with an annual revenue of between $10 million to $150 million. And lastly, Main Street has paid out $34 per share in distribution and has a dividend yield of 6.5%. So the third company that pays out dividends each and every month is a company called EPR Properties. So EPR Properties calls itself an experiential real estate investment trust. That's because it only focuses on properties where consumers can have a good time, such as ski resorts and movie theaters and other cultural venues. So it's been investing in experiential properties for more than 20 years, and although it had to cut out its dividends during the pandemic, it's now back to making a monthly payout. EPR Properties has a dividend yield of 6.9% and a market capitalization of $5.8 billion. So the fourth company which pays out dividends each and every month is a company called Realty Income. So Realty Income is also a real estate investment trust whose identity is predicated on monthly dividends, as it also calls itself the monthly dividend company. So this company owns single unit commercial properties to which it leases to high quality tenants for long terms for typically 10 years or more. So Realty Income has a market capitalization of $3.8 billion and a dividend yield of 4.5%. So the last but not least, the fifth company which pays out dividends each and every month is a company called STAG Industrial. So STAG Industrial is also a real estate investment trust company which focuses on industrial properties and warehouses. So the niches that have performed well in this company amid are the rise of the e-commerce, and particularly since the advent of COVID. STAG Industrial is a strong performer and is expected to grow significantly in the years ahead as e-commerce continues to rise. And it has a market capitalization of $5.6 billion and a dividend yield of 4.6%. So I've mentioned and explained the top 5 companies that pay out dividends each and every month. So now I'm going to explain what a dividend yield actually is and how to actually calculate it. Dividend yield expressed in percentages is a financial ratio which indicates how much a company should pay out or pays out in dividends each year relative to its stock price. So how this basically works is that suppose let's say a company has a trading stock which is trading at $20 per share, and then every year or annually this stock gives out a $1 per share of dividends. So for every 100 shares that you have, it's going to give you $1, right? So what you're going to do is that now you're going to say that one annual dollar which is going to be paid out divided by the stock trading which is trading at $20. So it's going to be 1 divided by $20, and then you're going to multiply it by 100, which is going to give you 5%. That 5% is now indicating that is the 5% of the dividend yield that's going to be paid out by the company. So that's how you actually calculate is that you're going to say the dividend yield is equal to the annual dividend which is being paid divided by the price of the stock which is currently trading, which means that's going to be 1 divided by $20 times 100, which is going to give you 5% of that dividend yield. So that's how it just basically works. That's how it's basically calculated. So with that being said, monthly paying dividend stocks are very appealing and attractive to each and every investor. But as an investor, you always have to make sure to assess whether is your company doing well, because some other companies may be paying out dividends, but you may find out that the company is not doing well in the stock market. So some of the things for you to look at when you want to invest in these monthly paying dividend stocks or companies, the first thing you need to look at is the dividend sustainability. Whether is this company being sustainable? Are the dividend actually going down or are they going up? And the second thing you need to look at is you need to look at the business model. Has the business model of the company changed? Has the company's objectives are they still the same, or the company has changed the business model? And the last thing to look at to assess when you're looking into buying these monthly paying dividend companies is lastly whether are they having a high occurring cash flow, meaning that is money getting in or is money getting out? Because some of the companies may be paying high dividends, but you may see that they're not actually having like the most big cash flow and all the other things. So those are the things to look into if you want to buy monthly paying stocks. As that, do they have a high dividend sustainability? Secondly, is that are they having the same resilient business model? And last is that are they having a high occurring business cash flow? So guys, we've came to the end of the video, and if you like this video, please be sure to subscribe, like, comment and share this video to people you feel like will help them. My name is Malakwan. I create this type of personal finance videos where I talk about investments, I talk about how to build wealth and all the other things. And please be sure and note that none of my videos constitute as financial advice. If you're seeking for any financial advisor, please be sure to look for someone who is certified and registered with the FSCA. So my name is Malakwani, and I will catch you in the next video.